Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We are broadcasting today from the Nebraska State Fairgrounds, where the Aurora Cooperative's annual summit with their members is underway. Lots of things happening in this market trade we're going to hit on today, including an update from what happened at the NCBA meeting. As you can see, Brett Kooima joins us with Kooima Kooima Varilek out of Sioux Center, Iowa. Let's start out with NCBA because you guys came back, got to see the contract library happen for the first time. Let's kind of talk about that. What type of reaction you got, because you guys work pretty hard within these committees.
Well, yes. Thanks, Susan, for having me on. And you're right. I thank you for asking that question. That issue as well. Iowa brought that issue to the NCBA convention 2 years ago. I spent some time at the microphone arguing the necessity to have increased transparency. To summarize the why of why we need a contract library, and some of our view, like mine, is pretty simple. I'm a cash negotiated trader. Those all get reported. Everybody gets to know what I got for cash cattle. Why don't we get to know what all the formula deals are? Obviously, those things are held confidentially. We don't have names on them, but to particularly go after what I call non-value AMAs, AMAs where quantity is rewarded rather than quality. I think the industry has a right to know that transparency. So 2 years in the making, and then ironically, we get our first look at that pilot program last week while we were there, and it's just fresh, and they don't have a lot of data. And they freely, the USDA, who does a lot of great work, admit that this is a work in progress. So one of the things, the resolutions that did come out of the Live Cattle Marketing Committee that I'm a part of, is to establish a working group. That's what the NCBA likes to call these groups of people that do some extra research and dialogue and review to see, if this product is as good as it can be. I would like to see a little more detail. There are others that would like to see it watered down, vague, so that you can't really tell all the deals. But I think collectively we can hopefully work through this. We've got until September for this pilot program. Maybe we'll see if we can't get a product that benefits the industry.
You guys also had the opportunity with a piece of information that was brought, I don't know, resolution, what do you want to call it, but brought to you in part by Nebraska and Iowa cattlemen as well.
Right. There was a collective, and it also KLA, Kansas Livestock, and TCFA, which is Texas Cattle Feeders, Nebraska and Iowa, did collectively bring this idea. And again, this lacks really a hard mandate or hard teeth in it. But at least we've got the NCBA saying that they support the quicker pickup of cattle. And in fact, specifically the resolution is, or I guess directive, anyway, political speak, that the NCBA would support the 7-day delivery period. In other words, a maximum of 7 days after you've sold your cattle, the packer has to pick them up, harvest them, or they can start to pay the feed bill, unless you negotiate it other than that. It's aggressive. I take the glass half full reaction for me. Those of us in the north have had 2, 3, 4. I've had experiences of more than a month after I've sold cattle that they still haven't been delivered. And then when you go through the kind of tough winter, brutal weather like we've had where the cattle don't perform, it's particularly irritating, for the producer to sit there with cattle. And I think it's also a matter of leverage and turning over this inventory to a packer so that he can just stockpile it while we're sitting here, feeding him through a snowstorm is irritating. So, again, it's probably words, but I think if we can get enough people in the north to go, hey, you know what, I'll support that. And if we just represent our cattle that way to the packer, say we're not going to sell them to you unless you pick them up in a reasonable time, maybe we can swing that pendulum a little bit toward us.
Well, I appreciate the update from NCBA. Let's talk about the seasonal movement of cattle right now. Obviously, we've got the Super Bowl coming up, and then it's kind of the doldrums as we wait for grilling season to take place.
Right. I think that's a good description of the demand side of the market, Susan. That last year was really evident, by the way. The week of the Super Bowl was short-term top in the market. I guess I see the two sides squared off as we're going into what I believe is tighter supply. But the demand thing is probably going to slow up, and it's been witnessed a little bit by there has been some slowing of the kill by some of the packers. People that watch the kill noticed that Monday was a small kill, and I know there's a couple of packers that are not killing the full 40-hour weeks. Either a little bit of slowdown in the meat, or maybe they anticipate and can see that the supply is getting tighter and they're trying to manage that supply just a little bit. So from a seasonal standpoint, it wouldn't be unusual at all to see a little softness in the beef here as we move forward for maybe 6 weeks, and then as soon as you can start to see light at the end of the tunnel, getting closer to Mother's Day, getting closer to grilling season, things like that, I would certainly expect this demand to get right back to as good as it was, and the demand is spectacular. So.
Well, we know Mother's Day is the biggest day when it comes to making those steaks on the grill for mom.
Biggest beef feature of the weekend, and probably the highest price weekend for New York strips, by the way. So,
how big do you expect this reduction in kill to go?
I think to feed it's going to be somewhat supply side driven. As we move into the end of the first quarter, I believe you're going to see a lot of days where that kill is closer to 120 instead of the 125, 6, 7 that we've been doing. And I think because that's the visible supply of cattle. I think that the weather has played a part of that role. We started out with high price feed, good weather through the summer for the most part. Guys were pulling cattle ahead because the cost of gain was so high. Then they got scared because it got so hot. They didn't want to lose cattle. So we ran into this, so-called yearling crop. I thought as current as we've been in many years. And then we stalled them all out because of the weather. Now, we didn't just stall out the yearling cattle. I'd say, as somebody that tries to feed these big calves and push them hard, to try to maybe catch the April market, it's going to be really tough across the north to have those cattle ready on a timely basis because the weather's been so difficult. The gains have been slower. So they're going to slow the kill down, but the really, really tight kills probably don't start till late fourth quarter this year. If I had to, put a circle around something of when is the supply going to be the tightest, I'd say maybe, and a lot of things can change kind of, but we've killed so many cows that some things cannot be changed. But by the time we get to December this year, things ought to get pretty interesting, in my opinion.
All right. Well, as we wrap up quick, this cash, no surprise that they say there's not going to be a Friday push, that we should have cash completely taken care of before the end of day Friday.
Well, we'll see. Late week seems like we're always higher when they wait till the last minute to try to, show their hand. There's been a little bit of bids in the south that are fully steady. There's been just an instance here or two, just real around the edges, but I think that 160 is in the cards in the north this week, which would be a little better for us. We got a little trouble here because we got so much mud, not finally warmed up. We're sitting, waist deep in snow. So we might have a little trouble with those live bids coming at us. But I think cash will be steady to higher this week. And then maybe we'll see once maybe where we don't see just a hair of a pause for the cause the week after that.
All right. Sounds good. Thanks for joining us this week, Brad.
Hey, good to be on. Thanks again.
All right. Just so you know, the background here, we are in the quilt room at the Nebraska State Fair. And we want to remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Road for the Rural Radio Network.